Hi, welcome to today's market structure training. We're looking at institutional candle. As you have said, you are partially correct. But institutional candle is simply that candle that did havoc, cleared liquidity or storm hunt, and then led to a break in market structure to the opposite side. That's institutional candle. So we're going to try to see how to trade it, institutional candle. We'll try to see how we'll be able to trade it perfectly. Oh, sorry, I needed to attend to something. All right, institutional candle is that candle that captures liquidity or takes the buy side liquidity. That's when the market is bullish and then led to a break in market structure. So if we have the buy side liquidity, if we have a bullish structure, there's a sell side liquidity around that region. So you have, let's say market is bullish, creating series of higher highs and higher lows, and then price went all this way and captures this liquidity, broke structure, and then price comes back to liquidity. So this candle here is what is referred to as institutional candle. That candle captures liquidity, led to a break in market structure, and then moved away. So most of the times, price will come to play either 50% of it, or will just come and mitigate their position on that particular candle. To come and mitigate their position on that candle. Just trying to make sure everything is okay. Yeah, so that candle becomes your institutional candle. That candle um gives you the confidence that price is going to come back into that place before price will eventually trade off. Price will come back into that place before price will trade off. So these are institutional candle. Okay. So this is the candle I'm referring to. So if I want to give a definition, please write institutional candle is that candle that captured liquidity and led to a break in market structure. What it simply means is that there are a lot of volumes in that particular candle that made it to take away the highs. Like in this bullish example now, all the sell side liquidities that were here captured, taken away, previous sellers captured, and then you can see how price rallied down, closed below the previous structural point. The price will just come, tap in on the candle, and price left. So this is what I want to talk about today. We're going to go to the chart and see how we can spot out this institutional candle. So by way of definition, let me write this for us. By way of definition. An institutional candle is that captured liquidity, whether buy side or sell side liquidity, and led to a break in market structure. That candle that captured liquidity led to a break in market structure. So that's the definition I'm going to give us. And by explanation, we want to focus on that candle. When I want to talk about entries and how to spot this candle, I begin to explain what to look out for and where to expect price. This is the reason why most of the times we set a trade and then we are expecting that price should come lower, lower, lower. And smart money comes, just mitigate the open of the candle and off they go. So we must be able to spot that institutional candle. Institutional candles are mitigation candles, but not all mitigation candles are institutional candles. Because we have smart money cubes that are institutional candles too, but they are not mitigation candles. So how do you want to spot this? All right, let me give you another example. Let's just have this for a bullish market. So we have a bearish market, price is trading down, bearish in this format, and the price comes, capture liquidity, and then let me remove this. Price comes, captures liquidity, and move up, giving you a break. Let me use this for my break. Giving you a break. This becomes your break in market structure. So this candle has a lot of things to do in the market. This candle has a lot of things. This is the candle you want to be able to just shade it out, and then you keep an eye on the candle. That's the candle you want to shape out, and then you want to see what price is going to do within that candle. Most of the times, price will just come play the open or play 50%. It now depends on the time frame you are seeing that institutional candle. So let me go back. So we're going to go to the chart, but before we do that, let me write this. Often than not, institutional candles price comes back to mitigate. Let's say either, okay, the open, that's what I want to say, the open, or 50% of the institutional candle. Often than not, either 50% or the open of the institutional candle is what price is coming into. Open. Now it depends on the higher time frame. You already know that a candle on daily or weekly will be many candles on lower time frames. So if the institutional candle is spotted on daily, it then means that while it plays the open on daily, or while it plays 50% on daily, it will not play 50% on the 1 hour time frame. Why it plays the open on daily, it will not play the open on 1 hour time frame. This is what I mean. Price can come and tap the open while you are waiting at the 50%. Let's say you go to a lower time frame, you try to refine your entries, and then you see an order block on the 1 hour time frame. You're expecting price to come there. Price can just tap the open here and leaves. The open here will not be the open in 1 hour time frame if this is your daily. So on daily, this can be like 3 candles, and you discover that the last 2 candles are the real order block. So price can just come towards that 50% or the open or whatever, and then price will go. So you want to wait for, that's why we wait for redistribution. If you go back to the market order flow video, you want to wait for redistribution above this high, above this high. That's what we thought, redistribution, because this is our break in market structure. Price breaks here, you can get a redistribution here. But once price has broken this, you don't want to start looking for a redistribution above this high, because you're not expecting price to come back here. There are a few cases when price does that, but price wouldn't come back here. Price will just go back from here. You now want to wait for a redistribution or reaccumulation within that institutional candle. Is that all right? If you are getting me, please let me know.
Yes, sir. It's okay.
It is all right. So let's have this example. And this, I think I should say this. While dealing with institutional candle, you need to take note of this, your previous month high, because these are the liquidities that an institutional candle goes to capture. Liquidities that an institutional candle goes to capture, your previous month high or previous month low, or previous month low. I think we'll be able to understand what it means from here. Or do I need to put them out? Mr. Friday, you're not talking. Are you there?
Come again, sir.
I said, do I just put the short form, or we should know?
No, it's okay. The short form is okay.
All right. The previous month high, previous month low,
anyway,
or previous week high, previous week low. These are the liquidities that an institutional candle is going for, or your previous day high, or the previous day low. They are simple terms, or sometimes the high of the day. You see something like HOD, high of the day, or you have the low of the day. Low of the day, or let me call it swing low. We call it swing low, swing low, swing low, swing high, swing high. These are the liquidities that an institutional candle goes to capture. Or we have the equal highs. Let me put it like that: equal highs, equal lows, equal lows. Let me put S, equal highs, equal lows. Double tops, supports, resistance. All these are liquidities that an institutional candle is designed to go and take, because it's an institutional candle. They know that, or smart money knows that, there are a lot of persons that are selling in that region, a lot of persons buying within that region. There are still positions that are open. Like if I take you to, let me just, okay, I would have loved to go to the chat. Let me just show you something. All right, let's go. We'll still get there. We'll still get there. So we have something like this. Let's say we are bullish again, and the price gives us this, clears this, and then price goes down. Now this here is your previous buy side, sell side liquidity, your previous week high. For instance, if I take that as my previous week high, this candle that comes to capture it is an institutional candle, and it will lead to a break in market structure most at times. Most at times. So some people call this top hunt, or whatever you want to call it, liquidity sweeps, top hunt. But we're just trying to understand the concept. So let's say I have my previous week high here. That was swept. So I have my
Hello, sir.
previous week high there. That was swept. Okay, previous week high. And then price comes and gives that break that we are anticipating. So that since price has given you a break in market structure, what you are expecting now is you want to wait for that return to the other block. And while price is returning, you want to take your feed and ensure that price comes to a discount, a premium zone rather, since this is a bearish formation already formed. You want to wait for price to come to all of this, all of this, all of this. It's just the concept that you need to know. So maybe I take you to the chart and then I just show you. There's something I want to show us on something I want to show us on step
Hello, sir.
index. Yes, sir, go ahead.
What I want to really know, the previous week high, previous day high, previous month high, is it that when we are on a very particular chart, assuming we are on a weekly chart, then it is there we can now spot, we cannot get our previous week high, or I don't really, that one is always confusing me.
Yes, previous week high, you need to keep, normally I've said it, your analysis should start from the higher time frame. So if you're on a chart that has months now, like this trading view, free trading view does not have the monthly chart. So you are supposed to do your analysis from the monthly. If you go to currency, you're going to find out that it has monthly, it has weekly, it has daily. You keep an eye on it because price will want to take out that high. And if you notice, price will come and the body will close below. I'm going to show you an example. I'm going to take you to step. What step has come? It will just come weak out the high and the candle will close. The body of the candle will close below. That's simply telling you that it was just a liquidity sweep. And then you can start looking for entry. But if you don't take it from the higher time frame, you might feel that price has broken structure to the upside. You are waiting for buys. Then when price comes down, you want to enter it, takes your stop loss because price has already closed below, indicating that we still want to go downward. Let me just take an example with step. Step. This is step. I think I saw something like that on 101x. All right. This is step. Step has been bearish, and from here, price broke structure, and price was now bullish. But this is a break of structure. Price came back and is bullish. But this was a high. This was a previous week high. You can see this was a previous week high or previous month high. This is the daily candle. Let's see if we can put it here. On the daily, it closed above. But on the weekly, I don't think it closed below. Let me open it on the weekly. Maybe I'll just send to it closed below. So we are expecting the redistribution above these highs. It came wicked out the highs, and if you go to H4, it broke structure downwards. So let me see if I can get the weekly chart step. Okay, I really don't treat step.
Can we get weekly on this device?
We can get weekly on. Let me get weekly on the phone. That's what I want to do.
Okay.
Let me get weekly on the phone. Okay, let's get weekly. Sorry, let me remove all the designs I did. Okay. Just give me some minutes. Let me screenshot this and send to the group. What's going on my, okay. Oh, I'm using the wrong SIM. So if it closes, okay, weekly, it's loading now. You know, we use the body for break in market structure. So want to find out whether the body of this closes above on the weekly. Let's see. Weekly, weekly, weekly. Okay. All right, let me snap this and save. Okay. Let's go to just give me some minutes, some minutes, some minutes. I just switched on my phone, so okay. Let's find out if it closed above or below. Okay, this is it. All right, this is the weekly. You can see the weekly. The weekly had not closed above. It's now this candle closed above.
Okay.
Are you getting it now? So when
Yes,
price came, the first thing price did was to weak out this place. So I was expecting that we should have a redistribution here to push downwards. To come and take out this. But now price came, created all of this internal liquidity and has closed above. What it means is that we are still bullish on the weekly. The weekly is bullish because this is now a break of structure. High, low, and price has given us a higher high. So now we will expect a redistribution here to come back into all of these candle. You can see how this candle came and captured these liquidities here. So this is an institutional move. This is an institutional candle. Captured all of this liquidity, cleared them off, and then resulted to this break. So now here is going to be your internal liquidity. Wherever price decides to stop here, if it chooses to come this way, no problem. But we'll have to wait for a redistribution here. This is weekly, possibly on a 4 hours, that will be fine. Then we go down. Then we can now look for a buy here because this will be a counter trend since price has broken structure. But come to the daily. If you come to the daily, it has already broken structure from here on the daily. So we are looking for buys. We're looking for sell. But now, if you go to weekly, because you have to make recourse. Yes, you have to make recourse to the higher time frame. So that was why we had the hit here. Like I was looking to sell around this place, around all of this place. I was looking to sell here. Why? Because on the daily, it has broken structure. So I thought this was a redistribution to go down. But now its price is weekly is telling me that no, it is now that price has broken structure. So this break of structure I'm seeing here wasn't a break in market structure as at that time. It was the body didn't close above. But now on the weekly, the body has closed above with this current move. So I want to now I want to start looking for my sell positions. So not here, my sell positions will now be anything that happened above the highs. So long this is above the highs, I just want to see what will happen here. If price decides to come and clear this, no problem. I will still have to wait. Because now I know that my next point of interest for the buy is all of this. This is my next point of interest for the buy. This information is coming from the weekly. You can see all of this clear. So my next point of interest for the buy now is all of this candle that captured liquidity. That's what I'm looking for now. The price should come into all of this place, and then but I can still catch a sell here. Price can keep going up. No, you can't determine how far price will go. So, but if you see like I see a 4 hours break in market structure here, I can take it down. Or 1 hour, preferably 4 hours, I can take it down to sell down, and then we keep buying up. So I'm not going to be expecting now that okay, price should come and then from here take us down. I can't expect that again because weekly shows clearly that we have broken this high on the weekly. So weekly we have broken these highs. You get it now?
Yes.
So be mindful of previous day highs, previous week highs. Most time price can just come, week it out, and then we start pushing to the opposite direction. So that's how to have stuff like this. So let's go. 10 more minutes for this call. 10 more minutes for this call, then I'll give you time to ask your questions.
Okay.
So like I said, you should be mindful of equal lows as well. So you can have price give you all of these equal lows. You already know from your knowledge of smart money that price comes for equal lows. You already know. So you don't want to be caught in this kind of situation. The price comes, take away the equal lows. Smart money will orchestrate that move that will take away equal lows. So this becomes your institutional candle. It will be around here. So now that price has given us the break, once this has been captured, the next thing is that price will go to capture the liquidity up, liquidity above. Yes, to come and capture the liquidity above. Buy side liquidity captured, sell side liquidity captured. The price comes after capturing it, clears this. This is what now gives you confidence that we can now wait for mitigation either at the open or 50%, and then you can take price upward. So equal lows like this can be, it can be previous month high, it can be previous month low. You just want to be careful. Let's go to like 101S. I think there's also a 101S. Let's check 101S. Yes, there's something I saw there that has been old highs, old lows. Okay, old highs, old lows. You see this old low was captured, and immediately old lows was captured, market distributed, and we went up for that retracement, came up. When price was coming, price took away the old high, rallied down, distributed. This was it. And somehow price came, price didn't get there, but price just came and they mitigated out of their position. You don't need to go deep to 50% or 100%. And no, old lows. But since you cannot tell how far price will go, once the low has been taken, you have to wait for a reaccumulation. In this case, old low taking, you want to wait for a reaccumulation. I want to wait for a reaccumulation, which price has not really clearly given us. You see that now? Price has not clearly given that reaccumulation yet. So I'm hoping that two things, price might just come here. This is not a trade call. Price can just come here, or we come to this huge imbalance around here. It's not a trade call. I'm just trying to show you something. So price can just come here and then give us, if there's no accumulation here, just be waiting at this area for a sell, wait here for a sell, wait here for a sell. So be mindful of the old lows and the previous week lows. I think that is that for institutional candle. We're going to look at the next market structure trading by Monday. I'm going to talk about either bullish order block and the bearish order block. An order block is an institutional candle. But I'm going to show us few things about bullish and bearish order block. So let me show you this in crash 1000 and then I'll drop the call. Crash 1000. An institutional candle is also referred to as an order block. So we're going to look at the bullish order block. We'll back test like 4 or 5 assets and then we'll be through with that call. So look at what price gave us high, gave us a low, and now clearly price has broken structure. Clearly, right? Price has broken structure. So this is what it should be now. If I now go to 4 hours, it becomes more clearer. Institutional candle is what we also refer to as order block. This is it. On 4 hours, this was a break of structure. 4 hours. Remember when we traded this and we caught this move here. But on the daily, it was not yet a break of structure. You see? Did you see that the thing came and wicked out? Did you see that wicks? And this is what I want you to understand. So you have to make recourse to the higher time frame. The higher time frame is more authentic than the lower time frame. Look at H4. H4 gave us a break in market structure. Yeah, we saw it. We played it. We played it. We caught this imbalance that was here. We go to, you can see that it's on the mentorship thing. Now, if you go to daily, this were just a week of the buy side liquidity. All the previous sellers here, sell side liquidity rather, we only captured. And if you go to daily, you find out that that was not a break market structure. You see that now? Look at the body. You see the difference. But now price has given us this break by this candle, Price has given us this break by this candle. So we have a break of structure now. So the next thing is to now go to 4 hours and begin to look for only buys, only buy opportunities. Only buy opportunities. So here is my last low. This is the last structural point. This is my last structural point. 50% of this should give me what I'm looking for. Last structural point. So I can wait for price in this 50%, or I can just play all of this and wait for what price will do. But I think I'll leave this. Let price come inside and give us that reaccumulation. So this is the break in market structure. Price should come. So you are going to treat everything you are seeing here as what? Internal liquidity, right? Top range, down range, range low, range low. It's the same thing. Now we don't know how far price will go, but for now, this is my top range. Let's say range high or top range. So this is what you now want to wait for. The price to come, you still have to take this as your liquidity sweep or stop hunt. So you have all of this, and you want to wait for price. If price gives you like a 15 minutes redistribution here, because this high has been swept, all of these highs have been taken away. This is the last high that's been swept. So a price redistribution 15 minutes, you can look to sell down. And price comes here, price will accumulate and then it can push up. So this is just how to trade order block. Price will come and mitigate that order block or the institutional candle. The positions here, if I go to daily now, let's go to daily. This is the re-break. So price need to come back here And you can see, if you watch clearly, this is a doji. This is a doji telling you that price is going to come to all of this. Either all of this, yeah, maybe something like this. But I prefer to just have it like this and wait for price to come back into it. So this is just it. Thank you very much. I'm going to be dropping the video both on YouTube and send you the link. So if you have not sent me your email, it is with your email I can add you. Since it's a private group, if I don't have your email, you can't access it. You can't access it. So you just try and send me your email and then so that we can move from there. Thank you so much for hopping on this call. You can drop your questions in the Telegram group. I'll attend to them.